Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the April 14th, 2009 stock market wrap up. Now, we're all going to go through the indexes together for the first time because I've been spending time with my girlfriend at home, just kind of watching TV because I did an interview for a website today that hopefully, if everything goes right, you just never know, the interview will be posted, I would hope, within the next week for time relevance. That interview should give you a lot of extra thoughts on what I'm thinking about the market because I don't necessarily tell you all my inner thinkings of the market, or maybe don't express everything that this interview will, because this interview asks some simple yet good questions. Excuse me, that will tell you a little bit more about my thinking on the market overall. Still, I don't think you're going to miss much. About the neatest thing you'll probably hear about is the iOmega story. I would hope. Well, the good news is that the story is confirmed a little bit. The prices are off just a tad, but Market Speculator was able to dig up from his Bloomberg terminal an old iOmega chart, and he didn't. He finally showed all of 95 to 96, so you guys can see how well it rid above the 50 and 200. The only problem is that the red bars, the down session, like the down days here that you see volume bars, are all red bars on the price action. So even if it was looking like AIPC that was doing really well for us, let's go back here to when it was still green. See, even on the down days, as you can see, the price is still green or yellow whenever it was yellow. So you never see any red bars up here. However, in market speculators, because it's Bloomberg and it doesn't take the color of the price bar from the BOP bars, you see a ton of red in the uptrend. However, that was not the case. In 95 to 96, where you see all green and max green BOP, take all the green BOP and automatically turn it max green, take all the yellow BOP and turn it green BOP, and take that red BOP that's right there at the end of October and make it yellow BOP, and that was iOmega. So iOmega would have max green BOP where the green, as you see, where all the yellow is, that would just be the regular green then, higher, and then the red would be the yellow. I mean, it was just that pretty, and it was gorgeous. And it ran up between, like I said, if memory serves me right, 2,500 to 4,400%, depending on where you got it. I don't know if I'm right or not, but I'm pretty sure that was it. But it's long it. The point is that the chart was gorgeous, and the point is that if it worked then in 95, 96, worked in like 1999 with one of my biggest winners. Let me show you that right now, since we're doing this before we talk about the market today, because we'll skip through it. Show you guys my 1999 best winner right there. Look at the Zoom 4. Just look at this baby. There's the top. Look at how fast it fell off, huh? Look at the arithmetic to show you how bad it is. Zoinks! Jinky, Scooby-Doo! I mean, burnt 3 days, lost 55%, but it don't matter, because on the way up from the buy to where it ends up being the top, the stock right here from this point moves 637%. So you're doing great there. However, where I went long, look at this. 1,304% move in 1, 2, 3, 4, almost 5 months. So in almost 5 months, 1,300%. That was excellent. That's how it used to be. But do you see all, let's go to Zoom 4. Do you see all the max green BOP? That's what iOmega looked like. But iOmega looked like that for the whole, back here. It was max green all the way. And let's see how much it's up going from here to the top. 1,875. That would be iOmega, but up in between 2,500 and 4,000. And the other thing is, the price bar would be above the 50 200-day moving average ahead of the breakout. As it danced around it, it wouldn't have been below it like it was down here where I showed you from, like the whole 2,100% move. That came after the breakout, like here in November. So this move here in November to the top is where you would have gotten your 2,500 to 4,400% move, just depending on the dollar amount that you got it on for iOmega. But gosh, it was so beautiful. Those days I'll just never forget. So a little bit of a history lesson. So I hope you non-subscribers learned a lot there and understand how the big money is made, because we just showed it to you again. But bottom line, it'll be back. Now let's go ahead and do the indexes. Not a good day overall. Uh, so the Nasdaq, as you can see, I'm going to go to a zoom 9, go all the way out in the plus bars like we are. You can see that the wick on the top is bigger than the wick on the bottom. That means that it closed near the low of the day and spent more time in the lows. Actually, let's see if I can pull up an intraday chart because I want to show you this site shows it the best. Look at intraday, the Dow Jones Industrial Average. I don't want to show you my IB account. That would be just not good, or MB just for me. I don't want to do that. Big down bar, ugly. Then you see the uptrend, downtrend. Then you see a little uptrend, then a major downtrend, the Dow. So the big two clearly obvious bars are sell bars within the intraday chart. Not good. Now the Nasdaq going fine on the way up, then boom, sells off. However, it has the big sell off, not when the Dow does. But then when the Dow had its huge sell off, so did the Nasdaq and so did the SP 500. SP 500 also had a nasty down day in the morning, which means each index had 1, 2, 1, 2, 1, 2 nasty intraday swoons before the end of the day. So that's just not good. That means that today this is not good action. And look at how the rally happened from 1 to 3. Gave even me a lot of hope. Like, all right, rounding off the lows. Somebody made a mention, possibly high day close, and I didn't disagree. I was like, very well could be. It'd be excellent. However, it didn't happen. Reversed, closing near the lows on the SP 500. NASDAQ, you see another ugly reversal bar. Dow Jones just not good. And that's where you end up with the heavier volume on the NASDAQ. Now you've seen the intraday action, so you know it's not that good. And it's just bad to see a higher volume day with the sell-off. The one thing to remember, though, look how much further ahead it is of the 50-day moving average. If we just use this place right here as a point of reference, it looks like the NASDAQ's right around 10% higher than the 50-day moving average. And I got to tell you what, that's fine with me. That's really bullish, and that's really good. So the NASDAQ, it can have some distribution days as long as it works them off quickly. So as long as our longs keep going higher, which I haven't scanned my charts yet, so I don't know if I have any sells. I don't know if I have any new longs. I don't know if I have any new shorts or if I have any partial covers. I haven't gotten that far yet. I've been busy today. I've been spending time with my girlfriend because I don't do enough of it, to be honest with you, and it's starting to make me feel bad. I feel guilty my own self. So, whatever. But I got to do this because I screwed up in my life. I screwed up in my life, and now I got to make it right, which means I got to work hard, which means I got to treat you guys right. And so right now I got to tell you, today's a bad day. Maybe some people scared you, but don't be too afraid. As you can see, we're contained. We're still holding the gap in the NASDAQ. 1, 2, 3, 4 days. Look at it, 4 days, still up 4.11%. Nothing to get extremely worried about. New York Stock Exchange, you can see closing near the low of the day, or is that at the low of the day? No, it's near it, but because it doesn't have it. And then as we showed you on the intraday charts, the FinViz, Dow Jones Industrial Average, once it pulls it up, there we go. Very, very ugly session. You can see the higher volume. Once again, I want to show you, look at the Dow Jones intraday action. Not good at all. Not good. Two big, ugly, ugly, ugly bars that ended up leaving it to this close, higher volume. It's not good overall. SP 500 held in there kind of nicely. You can see the little baby tail. Once again, higher volume. Go back down to FinViz, show you the SP 500 again. You can see it held the lows at the very end of the day. Still, the NASDAQ was the strongest one, and that's why the NASDAQ's relative strength line continues to be as nice as it is. Let's go look at it really quick before we move on to the other indexes. NASDAQ, look at that. Look at the relative strength line. New high. NASDAQ sells off 1.67% on higher volume, on slightly above average volume, and yet hits a new high. So things are looking okay for the NASDAQ. Trust me, things are looking okay for the NASDAQ. Look at the relative strength line, please. Compare the relative strength line from the November lows to now. You look at the relative strength line and look at how far we moved for the NASDAQ, 23%. However, we've gone from an extreme here to an extreme up there. So just very, very nice. I just can't lie. Just very nice. Now, unfortunately, the IBD information is not updated, so I don't know if it's higher volume or not. Let me go look one more time. Pull this up. Markets, S&P 600. Don't let me down. IBD. Oh, I did let me down. Okay, so it still shows. So I don't know the volume. Still down 3%. Still, it shows a tail. So it shows some support, if minor as it all can be. MID. S&P 400, you can see a little bit of a tail there also, holding the recent big move from April 9th, whenever it moved 5.50%. Since then, it's only lost 2.68%, giving a total of 2.67% gain during those 3 days. So still pretty good, nothing to worry about. Let me go and show you the IBD indexes to show you really quick just what they look like for you guys that may not have it, and I'm only going to be there for like 1 second. IBD 100, 154, up 3 points. That means it was up 2%, or down 2%, excuse me, because down arrow. So it was down 2% from the day before. Volume's higher. Distribution still overall. I told you, I've been saying it. Leading stocks have been going nowhere during the rally, and that's been a warning sign. And the warning sign might have been showing up today in the stock market if more selling starts to happen. So if we start to sell off, I can't say that, oh, I didn't see it coming, because I look at the IBD 100 and I'm like, well, let's just compare that to what we just had in the NASDAQ. And then you got the S&P 400 again. Doesn't show the volume, shows you sell-off too. Still shows you the uptrend line here. Want to just show you that really quickly on the IBD charts. Now going back to the IBD indexes, IBD 85.85. 1.7 down 2.9, so it wasn't quite down 2%, but it was down about 1.6